Welcome to Hot Money. My name is Neeraj Shah, and over the next 15 minutes we'll talk about a complete wrap of all the key stocks that have been buzzing over the last few days in trade. I'm Neeraj Shah, filling in for Darshan Mehta today. Let's welcome our experts then. Senthil Manikandan of Newberry Capitals and Umesh Mehta of Samco Securities. Gentlemen, both of you, thank you so much for joining in. Let's talk about the first stocks. We'll talk about a bunch of stocks. Let's start off Jet Airways, Torrent Pharma, Escorts, and maybe a theme to play for 2019, time permitting. Let's start with the first stock though, Jet Airways. Let's find out if Jet's loss will be beneficial for other airline stocks. Umesh, you want to start off?
So, if we consider Kingfisher Airline and if we do a case study, typically Jet Airways is in the same position what Kingfisher Airline was. Huge debt, negative book value, high, and reducing market share. So I think this, unless really some takeover happens or there is a change in management, we don't really think Jet will really come out from this mess. And given the clout that banks currently have because of IBC code, I think this time it could be different. But otherwise, Naresh Goyal, unless he leaves, Jet is going to have its own slow and steady death. But given even currently also Indigo and SpiceJet are gaining and Go Air are gaining at the cost of Jet, because aviation is what people do really have security, and across the board people understand that what's happening in Jet, and therefore flights in Indigo, Jet and Indigo, SpiceJet and Go Air are going full, and Jet is really grappling to capture the market share. So I think things are really bad. From an investor's point of view, I think it's negative equity value. There is no point betting that turnaround will happen, or let me take a bet.
Okay.
For investor, it's a clear no.
Clear no. Okay, 60 seconds. Investors a clear no. What about you, Senthil?
So, if you look at the entire sector itself, the market leader Indigo is just so far focused on yields, but over the last 2 quarters they went for the pricing wars. So that has resulted in the minor players like the second rank players like Jet and SpiceJet, they are pushed into losses. And Indigo, if you look at their market share, they have gained around 3% to around 43% market share. And if you look at the capacity addition, they upped their target from 25% capacity growth to around 30%. So I think even the crude oil prices has gone up and now they are down for this quarter. So it may help in yields in the next quarter maybe. But unless and otherwise, in the aircraft, particularly with respect to Jet is confirmed, I think they have to change their strategy on for the entire airline sector has to perform good. I think there should be some competition in the space. We can't allow Indigo to have a major market share.
Okay.
So for the
but is Jet loss Indigo's gain? That's the question really. 60 seconds are off. Very quickly, is Jet's loss Indigo's gain?
Yes, definitely.
It is Indigo's gain.
Yes.
You would believe Indigo could stand to gain as well?
Yes.
Okay. Keep that at the back of your mind. We'll discuss this in more. I just want to address those numbers as well on your screen. And Federal Bank, the numbers are out. Q3 net income 334 crores versus estimates of 316 crores. I think the NPA numbers are looking okay too. And remember, last quarter, Federal Bank was taken to the cleaners because they had a howler of a number. The NI this time around too seems to be okay. And a lot more stable is Federal Bank this quarter compared to what it did in the corresponding quarter, or compared to what it did in quarter 2. So the numbers don't look all that bad. We'll talk more about this as well in Ask BQ, but that is the performance from Federal Bank. No big surprises. I'm not spending too much of time on this. It's largely par for the course from the looks of it. Okay, the second stock on our list, and we're moving on from Jet Airways because frankly it's difficult to give a qualitative call. Umesh has summed it up right. Maybe avoid Jet Airways unless you know a lot more about it than anybody else does. Senthil believes Jet loss will be Indigo's gain. The next stock on our radar is Torrent Pharma. Now it may be a bit off in the session today, but it's done really well in the past few days. Almost trading at new highs every single day. Look at that. 12-month performance 35%, 9-month 41%, in the last 3 months 21%. So it's gained really well. Maybe, you know, somebody's lost, somebody's gained. Some positive news. Are there any other triggers? That's the question as well. Senthil, I want to come to you first on Torrent Pharma.
So I think the business has performed exceedingly well for the company, both in the domestic front and the US front. In the US front, they have been late entrant, but a couple of acquisitions over the last 2 years enabled them to bridge the product gap. So even if you look at Q2 earnings, US has outperformed the domestic growth. And even if you look at the domestic market, over the last 4 years, they have done 4-5 acquisitions. The last one, the Unichem acquisition. So, and previous to that, they have acquired brands of Elder Pharma. So I think all these, their inorganic growth strategy has worked out well for them. So over the next 2-3 years, we expect them they will be able to post industry-beating growth both on the sales and the profit front. But I think the valuations are quite unattractive at this point of time, because most of the positives have already factored in the valuation. We were trading at around 30 times 1 year forward earnings, which is not in line with the margin of safety that we prefer to have in any stock pick we choose.
Okay. What about you?
Giving the performance, I think performance on the fundamental point, company has done great. But from an investor's point of view, I think this is a time to sell. So why a time to sell? Because stock market has a habit of overreacting to the short terms. So what's the short term? Last 1.5 year, the acquisition of Unichem, and they were able to fire cylinders in German market, and therefore they have delivered growth. So this 40% growth is not that is going to sustainable. That is going to sustain, and no sooner the growth falters, we are going to have a reversal. And valuation around 5 times sales. So I think the benchmarks for pharma companies currently have shifted, from market valuation point of view. People are valuing it to price to sales. So around 4.5 to 5 times price to sale is huge. Even Sun Pharma is available at below 4, and other Dr. Reddy's and all other companies are available at 2.6 price to sales. So if valuation is high, everything is priced in. So I think when the news is great, when the fundamentals are great, it's time for investors to sell, and that is how they will be able to have the huge gain, and 50 times P multiple. So it is better to switch and make a basket of other low valuation, relatively lower valuation stocks, because ultimately pharma has become a commoditized business.
Okay.
And that is why we think that there is no point giving premium to Torrent Pharma and buying right now. It is better to sell and convert to other quality basket portfolio of pharma.
Okay, so yeah, that was going to be my question. Since you've raised that now, would you get out of Torrent and buy some other pharma companies, or you would want to switch out of pharma completely?
No. So pharma will be there, and given the institutional holdings at an aggregate level is lower because of underperformance. So even these guys will, once the bull market resumes, they will have, when the funds will come in, they will have to deploy. So money will come in, and so now where to invest? I think the lower valuation, players will do better and will outperform, rather than getting into a pricey stock.
Okay. We're slightly short of time. We have time for one more question, so I'll shift on to the next question, and that's Escorts. It's had a strong performance when the rest of the industry is looking like slowing down. Is the price valuing too much of optimism? Senthil?
Yes, certainly. I think if you look at the domestic tractor market growth, they have grown around 10% over the last 5 years. But if you look at on the agri sector or the farm wages, they have literally deflated. So there has been this is a contrary data that we are getting. But if you look at the market wise, Escorts is like the 4th player in the market. It's a really concentrated, competitive market. And over the long term, what we are seeing is as the farmers pass on their lands to their children, I think the land sizes is getting halved. So it's become more unaffordable for the farmers to own tractors, and even the existing players are looking for a kind of rental play to take this to the next level. And Escorts particularly, if you look at, they are majorly in the north and west market, so still they have growth prospects when they penetrate south and west. So on that they may grow 2 to 3% higher than the market. But on the other hand side, I think the margins are quite low. And also if you look at the valuation side, I think they're saying at 16-17 times on your forward earnings, which looks fair from my point of view. So there is no scope for major re-rating and return potential from this point of time.
Okay, so essentially pricing in not too much of a strong earnings growth. Since there is no re-rating and no return potential, I'm presuming even the earnings growth assumptions are lower.
Earning growth will be in mid-tier, so that has already been factored in the price.
Already factored in the price. Okay. What about you, Umesh?
Same thing. I think the one word, what to do with Escort, I will sell. Why sell? Because Escort is in 11, they have a market share of 11%, and previous 3 years they were able to capture the growth because of new products that they launched for agri segment. But I think this is a highly competitive market, and others have also understood that what are the things, what's selling. The real structural problem is farmer agriculture. Although government wants to double their income, but I think somehow things, the demographics or the system is not working for, and why will, so this is not a consumer demand, if this is a business demand. So if I have economics, so if I'm making money in my farming activities, I'm going to buy tractor. So that's not happening, and that is the reason why industry is difficult, number one. Number two, valuations are high, and number three, as I said, market has a bit of rewarding, is very short-sighted. So given the growth that we had seen, market is valuing that this growth will remain, but that's not going to happen. So that will be a bigger disappointment for the market, and therefore stock price will fall further.
Okay, we completely timed out, but maybe a 30-second answer from each of our guests. Umesh, to you first, the top theme for 2019. 30 seconds. Infrastructure. Infrastructure, and I think valuations, given the entire sector, given the PNC, KNR construction, NCC, they all are available at decent valuation, and given that depressed valuation, we'll see, once we see bull market, I think money will flow in and the stock will have a multiple trigger. Okay, so infrastructure as a theme is something that you believe is the top theme for 2019. Correct. Okay, Senthil, what about you? 30 seconds.
So, Sterlite Tech on the bottoms up approach, because we are seeing a huge 5G capacity capex coming from the telco front on the globally level. If you look at the current 5G penetration, it has been penetrated in South Korea, China, even US lags behind these players. So slowly this is a long-term play, and slowly over the next 3-5 years, I think once 5G picks up, the only medium through which the enormous data can be transmitted is optical fiber. So Sterlite Tech having a fully integrated manufacture of this optical fiber, they stands to benefit from, apart from other peers who are just purely a cable manufacturer. So
5G play essentially. What if prices come down, or what if prices of optic fibers come off?
So if you look at the manufacturers globally, I think there are only 8-10 players who are focusing on this segment. Plus, if you look at the Sterlite Tech, they are integrated player. They manufacture from fiber, then cable, from freeform to fiber to cable. So I think they stands to gain, even if there is price competitive comes on the market, they will be able to sustain their market share and grow.
Okay, cool. We'll watch out for that. So bottoms up story, Sterlite Tech. Umesh believes that the theme for 2019 would well be infrastructure. Gentlemen, both of you, thank you so much for joining in today and giving us your perspectives. Really appreciate your time. And viewers, thanks for tuning into this leg of Hot Money. Ask BQ is up next. Stay tuned to Bloomberg Quinn Live.